afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of the 2-Minute Drill, where we cover some of the technical levels that we're looking at on a couple charts that have caught our eye. Do that in 2 minutes or less. Before I get into the chart that's behind me, just recap what a wild 24 hours it's been. We traded sharply lower yesterday morning, sharply higher this morning. Some of those markets came back in. For corn this week, we're staring down a 28-cent range for that July contract. For July soybean, 66-cent range, and we're kind of near unchanged on the week in beans, which is kind of crazy. So the volatility is there, but that really shouldn't come as much surprise, right? It's that time of year where the weather continues to push and pull money flow, and that's going to continue to be the case likely for the next couple of weeks. Historically, we see the volatility in the grain markets rise into the back half of June, and then finally kind of top out in the first half of July. And so far, it looks like we are on that path. So we've got the July corn chart pulled up here. Go ahead and start that shot clock. 606 has been a level that we've been talking about for a while. That was literally the high of the day. We talked about it on our Ag Day interview yesterday. 606 not only represents the 50-day moving average, which is this red line here, but it also represents previously important price points, and it doesn't just account for what we've seen here over the last couple of weeks, right? This goes all the way back to last July, and if you want to take a closer look at this chart, I know you probably can't read that. This goes back to the gap from July of last year, and since then, it's acted as support and resistance, so a lot of interaction between buyers and sellers, and that's really what it boils down to when we're looking at technicals. We like to look at it as a roadmap of previous interaction between buyers and sellers. You don't need some fancy high-price algorithm to figure out where those inflection points are at the market. All you need is a little bit of research, spend a little bit of time on it. If you don't have time to do it, reach out to us. That's what we do best, and we can help you kind of navigate where those levels are. Nonetheless, that's the line in the sand that the bulls want to get out above. If we can do that, potentially that spurs a little bit of short covering and propels us up towards that 100-day moving average and trend line resistance, 625, 630. That'd be the next kind of target area for the July corn contract. Now, moving over to December futures, it's a little bit different of a market, but still, looking at the 50-day moving average and the recent highs as resistance, we get out above there. Potentially we run back towards the 550 area. You also have a little bit of an inverse head and shoulders forming here. That's going to be something to keep a very close eye on going forward. Again, remember, weather is going to be a big impact there. Now, in my final little bit here, let's look at a couple markets that were really moving and grooving here today. Live cattle. I don't know what chart formation that is other than holy cow. What a move higher we saw today. Limits are now 675 in live cattle. June options expire this week. So it's going to be very interesting to see how this market pans out going forward. That's 2 minutes, maybe a second over. If you want more information on what we're looking at in the cattle market going forward, feel free to reach out, Oliver at Blue Line Futures, or give me a call, 312-837-3938. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.